Hey guys, thanks. Welcome back to the Amateur Investors. This is part 2 of the Bitcoin episode. We highly recommend, if you have not listened to part 1, please listen to part 1. This will tie right into it. So thanks. Hello everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it. Ben, at the end of the last episode, you were asking me a question. If you want to just re-ask it again for our listeners.
Yeah, Chris, I think I want to talk about and hear your thoughts on, I think money in the way that we think about it broadly is we usually attribute money to a country. We have the US dollar, you have the euro for the Eurozone, the pound for the UK. What do you say to someone who purports that Bitcoin will never succeed because it's not owned by a government or a person and that it is decentralized? What do you say to that person? And what are the benefits of it being decentralized?
Yeah, so a very good question. Thanks for asking that. It's funny though. A lot of companies right now, even Square, PayPal, Robinhood, these are companies that they've, actually already pitched to the United States government about having it, and they've gotten approval to do so. Otherwise, if it was deemed illegal, they would be told they're not allowed to do it. But basically, trusting in the legal teams of all these bigger corporations that have now started adopting it, I also help think that that's kind of drive the price because it's given easier accessibility to people to buy it. Also, another thing is, this is something I found out in doing my research. There is something called Silk Road. It's this is kind of the dark web. I know that sounds kind of scary, but it was another exchange platform that people were using to transact. And a lot of times people are using Bitcoin to keep it anonymous. But they were able to actually take down that exchange. And actually the United States government, it will be, if the court case pending litigation, but if the United States government takes over the Bitcoins because of deeming them illegal action or illegal use, they will actually have Bitcoin on their books. So a lot of people are scared, like, oh, well, why would we allow this? They took down an exchange. So it actually leads me to my next point. So when you leave Bitcoins on an exchange, or if you were to even leave, an exchange is kind of like the stock market. So if you have Robinhood, if you have Webull, if you go to a broker, they are trading stocks on an exchange. So basically those apps give you access to what the exchange is doing. Bitcoin's the same thing. They have exchanges. They have Coinbase. They have Binance. They have Kraken. There's a bunch of different exchanges. So since Bitcoin is unregulated, and it's not, you always hear like FDIC insured, meaning that like the United States government will back them and pay you. If your money were to disappear, if you were to get hacked, if you were to get stolen, most banks, it's $250,000. So if God forbid something happened or the bank were to get hacked, the United States government would literally print money and fill those accounts back up again to give people their money. So same thing goes with Bitcoin, but Bitcoin's not FDIC insured because the United States government doesn't back it. So there's a saying in the Bitcoin community, not your keys, not your crypto. Basically, that means that if you don't have possession of your Bitcoin, which you take them off exchanges by putting them in one of two things, a cold wallet or a hard wallet. A cold wallet is something that there's a couple different devices. The two biggest ones are a Trezor, is the name of the company and the device, or a Ledger X or a Ledger S. So they're two devices that literally, they look like USB thumb drives. And what you do is you plug it into your computer and you take the Bitcoin onto this USB drive, and then you remove it from your computer or whatever device you're using to get internet connection. And it's now in a cold wallet. It's no longer connected to the internet. And even, let's just say, worst case scenario, you were to drop this in water and it would break. There's actually a recovery code that's 24 different words in an order that you have to memorize. They recommend not putting it on your phone or on your computer because if someone hacks in, they can look at your recovery code. They could use that recovery code and then pull all the Bitcoins off that device. So that's considered more secure, but it's more difficult. You have to plug it into your computer, unplug it into your computer. You have to put it in a vault. You store it somewhere safe. But yeah, that's something that, as long as you have a recovery code, even if the device breaks, you can always get them back. Then there's a thing called a hard wallet or a hot wallet. A hot wallet is connected to a device, whether it's on your computer or your phone, that exactly the same thing. There's a password to get in, and there's also a 12 to 24 word recovery code. If someone gets the password and they have your code, the 12 word key, they could get in and take all your Bitcoins from that device if it were to get hacked. But they have to hack individual wallets. If they, God forbid, hack an exchange, that means they can go into the exchange and extract all the Bitcoins off the exchange. Imagine if someone were to hack into the New York Stock Exchange and they're able to unanimously pull all of the stocks into their account, but Bitcoin, since it is decentralized and there's only the ledger of it, it would just show a transaction from the exchange into a wallet, but there would be no way to trace it because it's decentralized. Where if someone were to take it off the New York Stock Exchange, they would go from one IP address to another IP address, and we could triangulate and figure out whose address it's on and who took it or where it went, basically. And there's obviously a lot more protections on the New York Stock Exchange that they can do to prevent it because it's backed by, the United States government and a lot of world governments. So I know it's a little confusing, but I hope that kind of answers your question.
Yeah, Chris, I'm gonna challenge you on that claim, to say that like the New York Stock Exchange has more security than the blockchain of Bitcoin. So
Yeah.
I think there's a difference between your USB drive security versus the blockchain of a hack transaction. I
Yeah.
would make the claim that it is impossible, if not nearly impossible, to hack and steal someone's Bitcoin.
Yeah.
And the
So
reason,
I guess I will not say it's not more secure. There's more ways that they can, if it were to happen, they could give it back. But Bitcoin's more secure in the sense that it's hard to break into an exchange. Like, there have been exchanges that have been broken into, but it's very hard. If you acquire your keys, you take them off the exchanges, it is very hard, if not near impossible. I won't say near impossible, but it's very difficult for someone to get it from you without knowing the password and stuff like that. And I keep even my passwords and my recovery codes on a piece of paper. And actually, I'm putting them, in a bank vault or something like that. Or I was even thinking of engraving them on metal tokens and kind of putting them in order so that way people can prevent from getting them.
yeah, even more than just like the password hacking, I think more fundamentally, what's happening with, every time a block is added to the blockchain, in order for a Bitcoin transaction to occur, it must be verified by the majority of nodes in the blockchain. So it's essentially a community authorization of that transaction. So
Yep.
it is almost as if you have all of the internet looking at every transaction to make sure it is real. And that's
Yep.
what mining is. I want to get into like what mining is to like understand that. What mining is these miners, which are basically just computer programmers, they are solving equations to prove that a transaction is valid. So
Yep.
it is competition to secure the network.
Yep.
So every time, all the while people are mining on the network and receiving a Bitcoin reward for that transaction, everyone that is participating in the mining is verifying those transactions. So
Yep.
let's say if someone wanted to hack onto the ledger, I think that's the thing I want to differentiate. Someone may be able to steal your 24 words, but they will certainly not be able to counterfeit a transaction on the ledger because it is a community proof of work system that it needs to be verified by multiple layers of protection before it's ever added to the block. There are people who are inputting tremendous amounts of energy. You've heard this quote that like the amount of energy to like mine Bitcoin is like Greenland right now. All of that energy is not just to like get value, but it is literally to make the network more secure. Those equations are solving to determine if that transaction is true. So while someone might be able to steal your 24 words, the network of blockchain is just almost impossible to counterfeit as a transaction.
Yep.
Your point, Chris, I think that's what makes Bitcoin even more valuable is that if someone, let's say someone were to steal your Bitcoins, let's say they were able to get into your wallet, they knew the 24 words, like they have Elon Musk little brain chip in your head, and they're like, well, we know the words. What's the benefit and also a detriment, I guess, the benefit is in the eye of the beholder. If someone were to just say, oh, don't worry about those Bitcoins being lost, we'll just give you new ones, what that means is that it is now invalidated the value to every other holder. It
Yep.
makes you question, well, if we can just make Bitcoin for someone else and make an exception for someone else, then what is the value of mine? How can I trust always that my asset will always be perceived as value? If someone can just decide that I can get it back and that theft just never happened, I think it's sort of a defamation of the security of dollars, is having the FDIC as a solution. It's really a
Yeah.
short term. Those are my 2 cents.
Yeah, and actually, I love to just expand on that point of what is a blockchain. So I know we were kind of talking about that, kind of talking about the verification process and all that. And if anyone has any questions, they could feel free to reach out to us by email on any of our social media platforms and stuff like that. So blockchain at first, it seems very complicated, but if we break it down, it can be actually quite simple. So a blockchain is just a database. People are like, oh, well, what's that mean? So a database is just a collection of information that is stored electronically on a computer system. Information or data in that database is typically structured in table format and allows for an easier searching and filtering for specific information. So basically the way that Bitcoin does this is each transaction is added on to the end of it. So it's always like this transaction occurred, this transaction occurred, this transaction occurred. And, as you get further and further down this ledger or, blockchain, it's basically showing
of transactions to a block.
Yeah.
Usually transactions.
Yep. So one key difference between a database and a database collection of information, easier to access, specific information. So one key difference between a typical database and a blockchain is the way the data is structured. So a blockchain connects information and then groups it together. So that's like one block, also known as blocks that hold sets of information. Once a block has a certain amount of storage capacity or hits it, it's filled and then it chains it onto another piece. That's a new block. And then that process keeps going on. And then that's how one block connects and then it keeps connecting on all the way. And then the system inherently makes an irreversible timeline of the data when it's implemented and when it's decentralized in nature. So meaning as it connects, it says a timestamp of when this occurred. When each block is filled, is set in stone and becomes part of the permanent timeline of it. And then each block in that chain is given an exact timestamp when it is added to the chain. So then, it's always validating like, okay, this is the timestamp for this one. It's legit. It went to this address and then that is forever on. And then as soon as it tacks on another, so there's no way for you to pull out of the chain like 3 before or 5 before. The only time that it would ever really become corrupt is if it's on that one. But in order for that new block to get paired, it needs half of the internet or half of the nodes, like Ben was saying, to verify. So basically the only way to hack it is if you were to hack more than 50% of the internet in order to do that. And the only way that that would occur is if all of them agree that, this is the way it is, or this is the way it should be. So pretty crazy if you think about it.
It is crazy. And I think, like you're saying, I think at its core, blockchain feels pretty simple. Like it is not programmatically. I have no idea how Satoshi came up with Bitcoin, how this came about. It's absurd. But
he, she, or they are geniuses.
They or thems.
Thems, that whatever it is.
What's amazing about the security, just adding to the veracity of Bitcoin transactions, is I had to look this up because I didn't know. I also want to know how much data quantified goes onto a block. But there is
I forget. I need to look it up as well. I forget what it is. I know it.
Knowing. But what I do know, I was doing the research about it, there is no maximum number of blocks that exist. I was like, oh, I wonder if we'll ever get clogged with blocks. I feel like what a stupid thought. But really, it is a book with an infinite printer. It's a guest book at an Airbnb. So as everyone's making transactions, you're signing that guest book. But it's not just one book that everyone's kind of like looking over their shoulder. Everyone has that book downloaded on their Kindle with everyone who has a smartphone. So every time that a block is added to the network, it's not like Chris's phone has, the most updated, version 10 of the blockchain. Everyone is able to now see that transaction. So if you have a record of the blockchain ledger, you have every transaction of the blockchain ledger.
Yep.
Which I think adds an additional layer of security. It's not just that we're running a timestamp, but it is a shared collective timestamp that everyone has. So let's say we go 3 blocks into the future. If you want to hack block 4, and then 3 blocks are added after that hacked block, in order for that pinpoint to be verified, you now have to change all of those blocks in the future on every smartphone and piece of internet bearing device. So like every block only
And
adds
it gets exponential very quickly. And
very
it's funny, as humans, we can only think linearly. I know people like to say, like, you can see on a chart what exponential means, but we don't understand the concept of it in real time.
big numbers get very confusing very fast.
Yeah, we can't quantify them, literally what that means. So I guess this is a good time. So I was going to tie back to the definition of money. So
Yeah,
we've
please.
been always talking about the USD relative to Bitcoin. This is kind of the counter argument to gold. So a lot of people are like, why would, so Chris, Chris and Ben, you guys have hyped up Bitcoin, but why not just have gold? If, the US dollar was pegged to gold at one point, there's only an infinite amount of it, and a finite amount of it in the earth. So kind of here's my counter argument to that. So we'll talk through that, and then we'll kind of just talk about the key benefits on top of, owning Bitcoin over gold, and then just in terms of everything in general. So like I said, divisibility, durability, recognizability, portability, and scarcity. So divisibility, it's actually way better than gold. So divisibility, it's just literally sending, like Ben said, an email equivalent of Bitcoin from me to Ben, however much amount I want. On gold, if I have a gold coin, I either have to melt it down, or if I wanted to buy coffee with a gold coin, if let's just say I have 1 troy ounce, it's, like I said, about $1,800. I'd have to basically do gold dust to pay for a cup of coffee. So I either have to melt it down and make it a liquid form, or a dropper, or gold dust to pay for this cup of coffee. So it doesn't work. It's basically like you always need to change it back into US dollars to make it, to account for the divisibility to pay for something. So Bitcoin, way better in divisibility. Durability. So durability, even though gold is one of the best metals in terms of, it can't corrode, it can't do anything like that, it is still metal, and gold is actually very malleable. So it can be bent, and not saying that it just changes any of the property, but if you bend it enough times, it splits into two, and you don't have more gold. You just have now two pieces of gold, or people can shave off pieces of it. Like Ben and I were talking before, people can't shave off pieces of Bitcoin. They can't make pieces of Bitcoin. They can subdivide it easily, but it's not easy to lose in that regard. As long as you have access to the internet and you have access to it, you can get to it. Recognizability.
Chris, talking about just like the durability, I mean, sort of just a case in point. Chris and I work for a waste energy company,
Yep.
and we have stories of times when the facility operators have pulled out gold wedding rings, diamond rings,
exactly.
out of
So
trash.
yep.
They're not finding Bitcoins. So if it's as easy as vacuuming up a diamond ring versus Bitcoin, you can guarantee I'm going to keep the Bitcoin, where all I need to do is have my phone, or just the ability to log into an account from any phone and get that money.
Yeah. Recognizability. So actually, a lot of people be like, "Oh, gold is gold," but it's kind of like check but verify kind of thing. Trust but verify. So if I were to hand this gold coin to Ben, and I'd be like, "Hey Ben, this is 100% gold," is he just going to take my word for that, or does he need someone to come in and actually look at the metal properties of gold? I could be giving him fool's gold. It could actually only be 5% gold, or painted gold. Let's just say I took a quarter and I painted it gold, and then I say, "Yeah, Ben, this is 1 troy ounce, and it's all gold." If Ben doesn't do a metallurgy test on it, there's no way for him to verify. So that's actually more difficult. Where Bitcoin, we're just looking at the chain, we're looking at the transaction, we're looking at the ledger as it comes in, and it's very quick and easy. Where we need to hire a third party, or if Ben, unless he's an expert in gold, he has to verify it with with a magnifying glass, take a piece of it, verify it, look at it under a microscope, do all this work. It's very labor intensive to do it. Where Bitcoin, it shows the transaction and ledger history. Portability. Once again, Bitcoin, all you need is the internet connection and device. It's you can go to the library and log into your Bitcoin wallet or onto an exchange. It's really that easy and cheap and free. As long as you have a password and an account and it's linked to a bank account, it's that easy. Where portability, what? Go
If
ahead.
you don't mind me jumping into the portability real quick, I think people will maybe not think about gold as money. Also, I want to jump into like cash and credit cards. I think portability, people will be like, oh well, I can just carry around a few dollars. It's like, well, why would I ever need Bitcoin? Well, again, we talked about this with the credit card. You're carrying around a credit card, and which is essentially, I would say, a more primitive version of what Bitcoin is. Like, credit cards are a primitive version of what Bitcoin could be in the way that we use money.
Yeah.
Bitcoin is like what Apple is trying to do with the Apple Card, but it's just based on sound money, as opposed to you taking on 28% interest rate debt with a credit card company. So the portability you might think it's there, but it's not because you're tethered to a bank.
Yeah, exactly. And portability, even if you're thinking about it in terms of gold, if I was transporting a lot of gold, I actually need to secure it with, a Brinks truck or something like that. Like I would, God forbid, I want to be carrying around gold bars or gold coins in large quantities, where a Bitcoin, I can have a lot of it. No one can really know. It's kind of even secure in that regard, unless they have access to view my accounts. So it's more secure, and I can access it from my phone, from my computer, from anything with internet connection, and I can see how much I have. And then last one is scarcity. So once again, gold is still getting pulled out of the earth. Obviously, there's gold mines and stuff like that. But and people say there's a limited supply on this earth, but it's actually funny. It's something that I looked up more recently. There's actually an asteroid. I forget what the name of the asteroid is, but there's an asteroid that they determined is actually filled with gold. And actually, people were joking that Elon Musk or a Jeff Bezos could mine for gold on this asteroid. Prevent it from hitting the Earth. I don't think it's planning to hit there. But we say that there's a limited scarcity of gold on the planet. But as technology is growing rapidly, there's only ever going to be 21 million Bitcoins. There literally, there's gold in the universe. Or how do you know that there's not gold on any of these other planets? We have not gotten far enough and done enough research to really know. And I've been told I need to verify that. But they said that there's an asteroid that's actually a lot of its dense core they believe to be a gold. So yeah, there's a finite amount on Earth. But once we get to the outer reaches of space, which is already starting to happen with Elon Musk and Jeff Bezos and NASA and stuff like that. But who's to say that there isn't a giant asteroid that devalues essentially gold in the sense that there's a lot more of it and it's not as scarce as we once thought?
Yeah, and I was reading it's asteroid 16 Psyche, so I can
Thank you.
plug.
Yeah.
Yeah. I That's the thing. It's possible.
Yeah.
Like gold is an element. It is an atomic unit. It exists on the periodic table. It exists in the universe.
Yeah.
Probably everywhere there's a star, there is gold.
Yeah. Literally.
So the fact that it exists shows that there is a risk that it is a non-inflationary protected currency. And I think that's what's so unique about Bitcoin is it's already solved scarcity at Genesis day one. It is already solved that supply. It is fixed. It's anchored. We know exactly how many. So why would I not choose the one with the most certainty?
Yeah, exactly. And we don't even know in the oceans, like a lot of it on the land we believe to have found gold, but we haven't found all the gold mines on land, let alone if there's some in the ocean. You think about it just in terms of that. If we found 30% of the gold mines on land, there's 70% of the world is covered in water. So if you think about it like that, if we have better pressure vessels or things for diving down, who's to not to say that there's not gold mines under the Earth's crust in the oceans? So it's just not outside the realm of possibility. There could be gigantic gold mines in, any of the trenches of the Earth or stuff like that. So as technology gets better, it's not limited by, we only know there's ever going to be 21 million Bitcoins. There could be plentiful gold supplies that are lost in either jungles or in the ocean or stuff like that. It's not out of the realm of possibility.
Yeah, and gold, and I think what I want to transition to, because gold, because we're not on the gold standard, we're not trading in gold coins. Really, the battle is between fiat currency and Bitcoin.
Yeah.
But to the point about the gold versus Bitcoin, just I was reading this article and they sort of summarized why Bitcoin is so valuable and why it doesn't need to be accepted by a government or a person for it to be successful. Really, what it needs to be done, much like how fiat currency has succeeded, is it just needs to be trusted by the masses and selected by the market. And because it's a decentralized currency, meaning that anyone who has access to the internet has access to choose Bitcoin as their currency, Bitcoin will succeed as a monetary utility so as long as people value its medium of exchange, which I thought was really well summarized, that all money at the end of the day, it is a medium of exchange to facilitate trade. Paper money means really nothing to me. I have someone honking in the back, but money by itself means nothing unless it is spent at the end of the day. Like I can sit in a, like a Donald Duck pool of money and swim around and probably get a disease from that. But it doesn't do anything until it is spent or is used to earn more money to do something else. And I think that's what Bitcoin could do as well, just as good, if not better, as a fiat currency. I think that's really what money is at the end of the day, is the ability to transact under a common ground. That's all money is. And with enough people adopting and using Bitcoin, I think it's a very legitimate currency. It's scarce, it's durable, it's secure, it's portable, and it's decentralized. So you don't have to worry about a government printing more Bitcoin. That is just impossible. And I think I would love to go into some of the benefits of Bitcoin. So Chris, if you want to talk about that, I'd love to hear what you think maybe a problem that Bitcoin purports to solve that we haven't talked about, or just to dive into a topic that we already have.
Yeah. So things that it solves, definitely, it's kind of a free market currency. So, as Ben and I were talking, so Warren Buffett, we always talk about and we love him here. He always, when he was assuming and evaluating businesses, he was always assuming a free market economy. So what that means is we've seen more recently in the last at least 12 years. In 2008 was kind of the big one when President Obama bailed out GM and Ford and a lot of the motor General Motor companies or car companies. So in a free market economy, we would have let those people fail or let those companies fail. I know that there is counter arguments to that saying, well, if we let them fail, not only are the companies failing, but a lot of the employees would be losing their jobs. And I get that. I understand the economics of that. And I get there would be hundreds of thousands of people without jobs. And, it's not like just another car company would be able to suck up all the jobs that were lost. So I understand that. But when you stop letting certain companies fail or companies fail in general, that's kind of when you get into this bad dynamic of kind of what we're seeing now. So coronavirus is kind of the second step of, the economy failing in the sense that a lot of businesses were affected by it. They had to shut down. They weren't able to hold reserves or keep people employed. So they needed a stimulus to keep them going, or some businesses still ended up failing. But basically that free market's gone because not only aside from pumping money into the economy to keep them alive, we're now printing money at quicker and quicker rates to try and prop them up. And over time, this is only going to get worse and worse, so those are just kind of politics aside, that's just kind of what we're seeing more and more of it. Go ahead, Ben.
Yeah, and as that money is being introduced from a printing effort, again, like we talked about this, what inflation is really doing is just taking away the buying power of the masses. So as you're propping up these other companies, just to keep them afloat, which is really not in the spirit of capitalism, in my opinion, making these companies too big to fail, it allows for corporate bloat. You see it, this is even just absent of a currency discussion. You have these companies, I won't name them, that in the midst of an economic crisis, they're laying off employees, but they're instituting share buyback programs. All the while the government is considering a bailout program. I think fundamentally that's flawed. It takes away buying power from the American people by printing out money and forcing an inflation event. And I think having this decentralized asset in the form of Bitcoin and its controlled scarcity, it allows for the free market to choose the proper allocation of capital. There's not sort of this get out of jail free card. The money is what it is, what it's valued at, and that is what it should be. It should be supply and demand. It is a fixed supply asset. My next benefit of Bitcoin that I really want to dive into is, I think, developing a global economy. I think having Bitcoin and its accessibility and also just really distinct divisibility means that if there's we were talking about another country where you could be a billionaire, but you're poor because there has been such hyperinflation in your company or in your country due to this overzealous printing, whether it's to pay off debt or some other means. It is so difficult to acquire wealth in a country where the currency used there has been devalued to almost nothingness. And what's nice about Bitcoin is Ben, in the United States, can send someone any amount of Bitcoin, and that value is what it is. And you don't have to worry about exchange fees. I don't have to worry about that $30 wire transfer internationally. So you get an instantaneous global currency without the friction of in that country where $1 billion might be worth $1 in the United States. You don't have to worry about opening up a bank or a bank account. I think that's an amazing thing too, is not being restricted to hold capital and to build capital, having the ability to hold Bitcoin in a smartphone and not in a bank means that you don't have to worry about the friction of a credit check. You don't have to worry about not having, maybe even a pay stub. If you are trying to get on your feet, I think Bitcoin is a fantastic way to preserve wealth. Not right now, just because of, I think the volatility is so high. I think you almost have to exchange it if you're not investing it, in my opinion. If you're not investing in Bitcoin, I think it's best to convert to that currency. But Bitcoin is a tremendous exchange across international lines to avoid the friction of exchange fees, transfer fees. And I think it just allows for just global commerce and global cooperation. You don't have to worry about, the exchange rates and what have you. I think it just puts people on level ground.
Yeah. And also, this is just a fun fact. I was listening to a woman speak, and she's from Zambia, a country in Africa, and they actually have a banknote that's a $100 trillion banknote. And if you're just wondering, I just Googled this, and on eBay, you could buy this for 78 US dollars. And that's probably overpriced because someone on eBay is just trying to sell this, funny looking note. But it was basically due to the fact that they devalued their currency, that basically, for what it's worth, $78, you could have 100 trillion Zimbabwe dollars from the Reserve Bank of Zimbabwe. So we can put that up in our show notes, kind of just a funny thing to look at, but just kind of shows, it's not just the United States government that is devaluing our currency. And like I said, one of the benefits of being the United States is that we are the world reserve currency for now. That's something that I always like to say. For now, it's the world reserve currency, but there's nothing stopping from someone being like China. China could say, we don't want to take the US dollar anymore. You have to pay us in yen, and we have to pay the exchange rate going the other way. Obviously, a war would break out, and a lot of different economic factors and socio-political factors would break out, and we would, go down swinging one way or another. I don't think it would be a good thing at all, but it's just something to note. So like I said, that's kind of like inflationary protection is Bitcoin. There's only ever going to be 21 million. We're going to keep saying that number, where, any foreign government, Zimbabwe, China, United States, Argentina, Italy, Spain, whatever, they have the ability to print the currency into oblivion, is like what I like to say.
Yeah, and it's not even, and that's the thing. Like, I think what's so nice about Bitcoin is you have established inflationary protection. It's not out of the realm of possibility that we print the dollar out of existence. You've seen it, just like what you said in Zimbabwe. It's achievable to have your dollar be worthless. That is something that is in the realm of possibility. And I think even beyond just the printing, you've seen it in multiple cases of where a centralized banking authority has overstepped to control the currency. One really strong example that sticks in my mind is when the 500 rupee note in India was banned, and the goal of doing that was to prevent illicit transactions occurring within the country. And they were finding that there was a lot of correlation between the 500 rupee note and drug deals, illicit transactions. So you had a fixed amount of time to go convert those 500 rupee notes. I think it was also 1,000 rupee notes to a new legal tender.
Yep.
And while at first glance it's like, okay, that sounds inconvenient, to have to go uproot your life and go exchange any amount of money that you have, whether it's in the bank or if it's under your mattress, you have to go exchange all those dollars. What's really scary is that a government can just decide that your money is no longer worthless because they are the sole authority. That is a legal monopoly in which users are forced into using that utility until it changes. Again, going back to that referee analogy, it's like a referee in a sports game, but they're able to change the rules without telling the players. I think that's what's so interesting about Bitcoin, and why I firmly believe in the value of a decentralized currency is that the rules are what they are and everyone knows them, and you either play by them or it doesn't work.
Yeah. And even I heard, this is kind of a less popular opinion, but kind of talking about what if China China has already tried to outlaw Bitcoin. They took down the exchanges. There's people in China that still have them on their wallets, we assume. Obviously, it's tough getting information out of China. But even, let's just say the United States were to outlaw Bitcoin, there's always a possibility of, it's very tough for a government, foreign or domestic, to account for what's in your account if you hold it in your own wallet. It's very tough for them to see. Obviously, if they look at the exchanges and they see that you're pulling it off, they can try and tax you, or as soon as you bring it into their native currency, they can tax you on that. But let's just say the United States were to outlaw it. This is not something that's favorable, but you could move to a new country, and a country that's considered a third world country, or even a country that's not third world, a first world country, but they're like, oh, let's just say Australia is like, we welcome people to use Bitcoin. It would actually prop up their economy, and it would greatly hinder the United States and China and all these different places in terms of growth and innovation. So that's just something that I would tread very lightly if people were to start, illegalizing or making it illegal.
Yeah, the thing about that is I firmly believe that in order to override Bitcoin at this point, I think that it would be a violation of the First Amendment. I think
Yeah.
because we are discussing an open source source code for this technology, I think you'd be violating the freedom of free speech.
Yeah, and it's funny you should bring that up. There's actually a court case on that. They were trying to, I forget the name of it. It was something versus the United States government, went up to the Supreme Court, and they approved it because the guy printed out the 15 pages of protocol and was like, this is what you're trying to ban me from having. And it was literally just code. And they're like, well, we can't, the Supreme Court actually came up and said,
The PGP, pretty good privacy case.
Yeah. So we could put that in the show notes as well. I know we're kind of we want to try and keep this under half an hour, so we'll just hit on these last key topics. So how does Bitcoin differ from different cryptocurrencies? We kind of spent all 2 episodes talking about Bitcoin. So this is kind of a way that we kind of eliminate all the other ones. So Bitcoin is fully decentralized. So not all cryptocurrencies are decentralized, meaning that sometimes a lot of the new ones that have popped up are owned by a company. And it's almost like the equivalent of owning shares, like Ripple is one of them. Or another thing, not only does the company own 60% of the Ripple coins that are available, they could change the monetary scale whenever they want. They could input more Ripple coins in, where Bitcoin is fixed at 21 million. Another one is I know a lot of people talk about Ethereum. Ethereum's interesting, but you can't run a full node on it, meaning that people can introduce them and basically counterfeit them doesn't have the full chain. It's like there's innovation. They're trying to make it easier and faster to exchange. Bitcoin does take a little bit of time, but for Ethereum, there's not a continuous ledger of that information. And then kind of like I said, there's a permanent ledger and protocol. And not only that, Bitcoin's is the simplest of all cryptocurrencies, or at least all that are in service right now, meaning that when it's such a simple protocol, it's very hard to hack or find the ways to break into it, versus if it's very complex. It's kind of like the internet. The internet's based on different protocols and platforms, and websites can get hacked, but you can't hack the whole internet. The internet itself is kind of unhackable. You can hack applications or web pages or different things because they're built off of the base. So that's just kind of that information, basically.
Yeah, Chris, that was a great summary. I think with those cryptocurrencies, honestly, the reason why Bitcoin will succeed over these is most cryptocurrencies are forks or imperfect clones off of the source code of Bitcoin. I think that's the danger of having an open source code for any program, is that anyone can copy it. That's the beauty of it, is that anyone can see it and copy Bitcoin. We can go make the amateur investors coin maybe within a year, because I'm not good at coding, but we could physically go look at the code, change it, and just change the name. We could change the rules. But the big thing of why Bitcoin, just being the highest market cap, having the greatest security, it is just a peer-to-peer validation, proof of work network. We can trust it. It's the most secure, it's the most divisible, it's the most permanent. I want to use the analogy of, anyone can go and make their own coin, much like, I can go purchase a coffee with my Starbucks stars. I can go to Home Depot and say, hey, I want a 2x4. Do you take Starbucks stars? And they're going to say, hell no. You can make any form of currency that you want, but the value is in the medium of the exchange. And because Bitcoin is universal, it's decentralized, there's no pressure from another company to try and change the rules. It is exactly what it is, and you are getting everything exactly as advertised, and you can trust that it will work every time. And I think that's what sets it apart as well, is that,
Yeah. Yeah, and even I know one of the last things we wanted to touch on was talk about the Bitcoin's return since inception. So, we always say past results aren't a definite, don't guarantee future success. But
Right.
Bitcoin since 2015, I was having trouble finding, I can do the calculations later, but Bitcoin has nearly a 3,500 return on investment since 2015. That is 70 times that of the five traditional stock markets, the New York Stock Exchange, Canadian, European, all those different exchanges and stuff like that. So it's just crazy to think about 3,500 return on investment since 2015. So it's the best performing asset class. And there was even, I think it was Raoul Paul was saying, a great Bitcoin enthusiast and all that, and macro investor. He was saying that if you had 1% of your Bitcoin or 1% of your portfolio in Bitcoin, it would have, outperformed the S&P 500 over the last 5 years and even since its inception. It's just crazy. It's just the best performing asset class there is. Not saying that that's going to be like that way forever, but they believe with, the printing of money and all that, it's going to perform well until governments decide to stop printing money and devaluing currencies. So that's just what they see
Yeah.
right now.
And I definitely, I'll make a chart, Chris, because I was trying to do this before this episode, but I didn't have time in between dinner. I wanted to plot or just like chart out if you had bought one Bitcoin every year since its inception on January 1. I want to do like a quick case study of what your returns would be if you had bought, maybe if you put $100 into Bitcoin every year in Jan 1. Let's
Yeah.
think real. Owning a
Yeah,
Bitcoin.
and then we could show the returns based on that. Yeah, basically just showing simple dollar cost averaging, dollar cost averaging per year, and that'd be a really interesting chart. Yeah, if you want to make that up.
Yeah, and I
But
think Bitcoin, I'll let you wrap up, but I think Bitcoin, what's amazing, I think just as a hedge and an insurance, in case Bitcoin succeeds, I think I'm going to recommend, I'm going to put myself on a limb to own at least $1 of Bitcoin. You can go into Robinhood and buy $1 worth of Bitcoin, but I think what's so nice about Bitcoin, absent of macro trends, is Bitcoin is just a pure supply and demand function.
yeah,
You don't have to worry about what the Fed is doing, printing money. You don't have to worry about international trade or tax rates. It just is what it is, and that's what's amazing about Bitcoin is it just continues to exist the way it
yeah.
does.
One thing I would recommend, so yeah, you can have it in your Robinhood portfolio, but I actually moved all of my Bitcoin off Robinhood and into actual and exchanges, and then I actually put them in my hot wallets.
Yeah.
Because Robinhood, it's basically like the equivalent of someone being like, I owe you a Bitcoin or whatever fraction of a Bitcoin. It's the same thing with gold. A lot of people paper trade gold, and I think that's a very dangerous game that you play because God forbid you need your gold in an instant. There have been cases of people leveraging gold that they don't have. And the same thing can be done with Bitcoin, meaning that, I give 10 people, yeah, I'm going to give you one Bitcoin, but I don't even have a whole Bitcoin myself. It's almost not a Ponzi scheme because it's not, but it is in a way. It's like you're taking new investor money and I'm saying, oh yeah, I owe you a Bitcoin, but I don't have one myself or the capital to cover that cost. So
It's
that's
credit
just something.
card asset, which is just fundamentally flawed.
Yeah, exactly. So that just kind of shows the flaw of the US dollar and leveraging things that you don't have. So basically, thanks for listening to our Bitcoin episode. I know we threw a lot of topics, terms, different things. I know it can be very confusing. Ben and I have done a lot of research, literally hours and hours of research. And not only do we not understand all of it, there's still more to be learned. But I think I like to believe I have a pretty good understanding of the basics and fundamentals. So if you guys have any questions, you guys reach out to us on Twitter, Facebook, Instagram. We're now on TikTok, YouTube. If you want to comment there or even, write a review on any of our podcast platforms, that would be lovely. We also have a website that Ben and I have worked really hard on. You can always check that out on mobile and or on the computer. If there's anything else you want to add, Ben, I think we're going to wrap it up there.
Yeah, I think an easy way to get in touch with us, if you just want to have a hub for our show notes, our videos to link to Spotify or whatever, it's theamateurinvestors.squarespace.com. We have a contact form. Fill out a line, drop us a question, and honestly, we're trying to keep a cadence of answering the audience's questions. So if we have enough about Bitcoin, we could do a follow-up episode just specifically to answer the audience's questions. So more to come. Thank you for watching and listening, guys.
Have a good one, guys. See ya. Bye.